Hi everybody, welcome to another update on the stock screener. Someone wanted to look at gold miners at 8,000 gold. First of all, 8,000 gold is somewhere here off screen, so it's just for fun. Let's look at gold miners at 8,000 gold, but actually, when you look at where the gold price should be right now, it is actually almost 8,000 gold. So 7,000 gold is the calculation to back the money supply by 20%. Okay, so that gives us 7,000 gold, because we know what the money supply is, and central banks need to buy gold and back this with 20%. So that gives us a fair gold price of 7,000 per ounce, right? Based on 20% of gold backing. This is the amount of gold they hold today. Another way to calculate this is with the gold certificates. We know that the Fed has $11 billion of gold, currency in circulation 2 trillion, and you have 8,000 gold. If you need to back the gold certificates with the currency in circulation, then you have 8,000 gold. So let's look at 8,000 gold. So this is a chart, and we are going to expand this to 8,000. So let's take 500. Start with 2,000. Expand our y-axis, of course. This is going to be extreme. So let's start with Cabi Gold. It's even higher than this. 40. Okay, so Cabi Gold at 8,000 gold is going to be at 35x, up 3,400%. If gold were to be 8,000 and there is no inflation. Same costs. So 34x. What's this one? This one is I don't know what is a step gold. Only at 30x. Som Gold. Som Gold will be almost at 30x. We have this one is Mineros, only a 17x. Monument Mining, we have a 25x. So you can see plenty of upside, right? 30x. Just put all your money in these miners, do a 30x, and you can retire. Okay, so let's look at Cabi Gold in particular. What happens when we put this at 8,000 gold? So magically, overnight we go to 8,000 gold, and they have the full license as well. This gives us, am I reading this right? 2 billion. 2 billion in NPV. 2 billion, so from 50 million to 2 billion is times 10, and then, is this correct? This is million, billion, 2 billion is 2 billion divided by the enterprise value. That's 46x. 46x. Yes, that could be correct. Yes, Cabi Gold would be up 3,400%. Yeah, it's not a real 46x. Why? Because they have cash on hand, right? So they have too much cash on hand, which reduces the upside. You know, if they have debt, then they have more leverage. Let's take a look at Som Gold. Som Gold has debt. So here if gold goes to 8,000, if gold goes to 8,000 overnight, then Som Gold would be unreadable on the y-axis. Major units. So Som Gold would be at 1.6 billion. What? 1.6 billion NPV. That's a lot, 1.6 billion NPV. I'm reading this right, 1.6 billion NPV divided by the enterprise value. That's 18x. 18x upside. So this is Som Gold, 18x. So here it is not 18, but 28x. Why? Because of the financial leverage. So you have 18x and it's actually 27x. Why? Because the market cap is lower than the enterprise value. They do have some, yeah, so here you see the market cap is 54 million, enterprise value is 85 million. So if this goes from here to here, then the market cap will go from here to here. So that's more upside because the market cap is lower than the enterprise value. Okay, so amazing, right? 1.6 billion NPV. 1.6 billion NPV. Cabi only 2 billion NPV. 2 billion NPV with already a market cap of 45 million US dollars. So, yeah, this was the video. Just to look at the upside when gold hits 8,000. And maybe we should not even imagine that happening, but it could happen because if we back the currency in circulation with gold, then it should be 8,000 dollars per ounce. And if we back the money supply with 20% gold at the central banks, then we should be at 7,000 gold, somewhere here, which is a 30x for Cabi Gold, 25x for Som Gold, 20x for Monument Mining. So a lot of x's. And this is why we invest in these cheap gold miners, because who knows, the gold price can go to 8,000. I'll see you in the next video.